$4.75 billion for liquid cooling. Ecolab is basically paying to be the world's most expensive plumbers.
Oh, come on. It is pure AI infrastructure. You have to pay up to ride the Megadeal wave. This is the K-shaped recovery in action.
K-shape just means the big guys are throwing cash at anything near a server rack. The footnotes on this are wild.
Naturally, but if we are talking about paying top dollar for premium liquids, we really need to look at what Pernod Ricard is pouring. The rundown. So the analysts are calling early 2026 a K-shaped recovery for M and A, massive megadeals at the top, absolute crickets at the bottom.
I hate the letter shape analogies, Nate. But look at Pharma this week. It is just a wall of cash.
Gilead dropping $2.2 billion for Ouro Medicines.
Right, to get their hands on that T-cell engager program. And Novartis right behind them, $2 billion flat for Synnovation's breast cancer drug.
$2 billion for a single drug asset. The multiples on these oncology plays are getting absurd. I mean, you're paying for perfect execution in clinical trials. If one phase 3 reads out poorly, that $2 billion is vapor.
I completely disagree. You aren't paying for perfect execution, you're paying for survival. Novartis has massive patent cliffs coming. They looked at their pipeline, panicked, and wrote a check. It's defensive, not offensive.
Defensive or not, it's a huge premium. Speaking of paying a premium for survival, Danone just bought Huel for $1 billion.
Wait, really? The Tech Bro meal replacement powder?
The very same. Danone wants into the high-protein meal maker space.
$1 billion for blended oats and pea protein. I read that press release 3 times looking for the IP. There is no IP. It's just aggressive marketing and a plastic shaker bottle.
Don't underestimate the shaker bottle, Maya. It's a lifestyle brand now. Danone needs growth. Traditional yogurt isn't cutting it, and Huel has a massive cult following.
$1 billion cult. I'm in the wrong business. We should be selling powdered podcast supplements. Deal Street Daily, chalky vanilla.
I would buy it. Let's pivot to some satisfying corporate theater. Jack Nicklaus is finally getting his name back.
Yes, teaming up with TWG Global to buy back the businesses he originally founded.
The Golden Bear is reunited with his namesake brand assets. As a former banker, I have to say, founder buybacks are incredibly rare and usually messy. This one just feels nice.
Nice doesn't pay the debt service, Nate. But sure, it's a great narrative, just like Motorola Solutions scooping up Bell Canada's land mobile radio networks for 675 million Canadian.
See, you always bring it back to the boring stuff.
I love boring. Smart infrastructure, steady cash flow. It funds the madness.
You love boring, but the market loves AI. Market strategists are screaming about artificial intelligence driving massive capital reallocation and forcing strategic pivots across legacy industries.
Which brings us to the actual elephant in the room today, Ecolab.
Exactly, $4.75 billion for CoolIT Systems. We need to tear this one apart because paying that much for data center liquid cooling is wild. The big one. I just can't wrap my head around a soap and sanitizer company dropping $4.75 billion on AI infrastructure. It feels like a late 90s dot-com pivot.
They don't just make hand sanitizer, Nate. Ecolab is a massive industrial water management player. And if you read past the headline on this CoolIT Systems deal, the logic actually tracks. Data centers are drinking absolute lakes of water right now to cool these new generative AI chips.
Okay, sure, I get the water angle. But nearly $5 billion for a company that makes liquid cooling tubes for server racks? That's a pure AI tax. Ecolab is paying a massive premium just to get the letters A and I into their next earnings call.
Oh, come on. It isn't just buzzword hunting. I pulled the data on server farm energy usage. Traditional air conditioning literally can't handle the heat output from the newest NVIDIA processors. You have to pump liquid directly over the chips. CoolIT dominates that direct liquid cooling market. Ecolab already has the global supply chain for industrial water treatment. They're just moving from the cooling tower directly to the server rack. That's actually smart.
It's a brilliant story for the pitch deck, I'll give you that. The bankers definitely earned their fees spinning this one. But you're ignoring the broader market context. This is the absolute peak of the K-shaped recovery analysts keep talking about.
You mean the divergence in deal sizes?
Exactly. Middle market M and A is basically dead right now because debt is still painfully expensive. But these mega cap strategics are sitting on mountains of cash and they're terrified of being left behind on the AI transition. So you get this K shape, small deals flatline, while Ecolab throws 4.7 billion at a cooling company because they panicked.
I don't think they panicked. I think they looked at their legacy growth rates and realized chemical treatments for hotel laundry systems wasn't going to give them a tech valuation.
See? You just proved my point. They're buying a multiple. It's financial engineering disguised as a strategic pivot. They want investors to treat them like an infrastructure play.
It's only financial engineering if the integration fails. And frankly, I trust a century-old industrial giant to figure out complex plumbing more than I trust a software startup to figure out global logistics.
Fair enough. Plumbers usually do get paid. I just hope they didn't buy at the very top of the market. Though speaking of paying absolute premiums for growth, the legacy industrial giants aren't the only ones writing massive checks this week.
Right. Pharma is apparently allergic to small deals right now too. Gilead and Novartis both just dropped over $2 billion each.
$2.2 billion from Gilead for Ouro Medicines, to be exact, and Novartis throwing $2 billion at Synnovation.
We need to pull that Synnovation term sheet. Buying a breast cancer drug at that valuation means Novartis is betting the entire farm on their phase 2 clinical data. Voices.
So the consensus from the macro strategists this week is that early 2026 is entirely defined by a K-shaped recovery.
I physically cringe every time someone says K-shaped.
I know you do. But the analysts are not wrong here. Deal values are surging entirely on the back of megadeals. The top end is exploding while smaller transactions just lag behind.
It is not a K-shape, Nate. It is just extreme concentration risk. And the other narrative they keep repeating is that AI is the ultimate catalyst forcing strategic pivots across legacy industries.
Which is completely true. Look at Ecolab spending $4.75 billion for CoolIT Systems, a water hygiene company buying server liquid cooling. That is the exact definition of a legacy pivot driven by AI data centers.
Is it a brilliant pivot, or is it just corporate FOMO? I read the footnotes on that release. The integration strategy is incredibly vague. Paying nearly $5 billion feels like they looked at an AI trend chart and threw a dart to get a multiple expansion.
Oh, come on. You are being way too cynical. Ecolab already has the industrial plumbing expertise. AI data centers run ridiculously hot. It is a smart adjacency.
I need to see the revenue breakdown before I buy the narrative. Everyone wants an AI halo right now. But look at the other megadeals. Novartis dropping $2 billion for Synnovation. Gilead spending $2.2 billion on Ouro. Pharma is just doing pharma.
Fair point. But not every deal right now is about AI or pharma pipelines. Some are just pure, satisfying corporate theater.
You mean Jack Nicklaus?
The Golden Bear himself? He teamed up with TWG Global to buy back the exact businesses he founded. He finally reunited with his namesake brand assets.
You really have to respect the spite-driven founder buyback. It is my favorite subgenre of M&A.
It never gets old. But speaking of heritage brands that make people highly emotional, the liquor world has some very expensive drama brewing this week.
Oh, I saw this. Pernod Ricard is finally making moves.
Grab a glass. The Brown-Forman whispers are getting very loud. Spill the tea. I'm just saying, there is nothing more satisfying than a founder buying back their own name. Jack Nicklaus teaming up with TWG Global to get his original businesses back? That is peak corporate theater.
It's entirely an ego play, Nate. The Golden Bear reuniting with his namesake assets is a great PR spin, but I want to see the multiples TWG actually paid to make this happen.
You have zero romance in your soul. Sometimes a deal is just a good story.
I have romance for clean term sheets. Speaking of messy ones, though, what are you hearing about Pernod Ricard?
Oh, the absolute top shelf of gossip right now. Pernod confirmed they're in active discussions with Brown-Forman, a blockbuster combination. Imagine absolute vodka and Jack Daniels under one roof. It's a brilliant play for global distribution dominance.
Wait, brilliant. Are you kidding? That's a regulatory hangover waiting to happen. You can't just smash two massive liquor portfolios together and pretend antitrust regulators are going to look the other way.
The portfolios actually complement each other. Brown-Forman dominates American whiskey. Pernod has the international clear spirits and scotch. The synergies are staring you right in the face.
Synergies. You sound like a first-year associate trying to justify a weak pitch deck. The overlap in distribution channels alone will force them to divest half their mid-tier brands. Plus, Brown-Forman is heavily family-controlled. The voting structure of a combined entity would be an absolute nightmare.
Okay, valid point on the voting structure. The Brown family doesn't give up control easily, but if they pull it off, it completely reshapes the beverage landscape.
I'll believe it when I see a definitive agreement that actually addresses the antitrust risks. Until then, it's just expensive talk over expensive drinks.
Fair enough. We'll keep tracking the liquor cabinet drama, but we should probably prep for tomorrow because SAP is expected to drop more details on their Reltio acquisition.
Exactly. And we should finally get the formal Rule 2.9 filings on Brookfield Wealth Solutions scooping up Just Group, so check your feeds early. Tomorrow's radar,
I am refreshing the regulatory feeds at dawn tomorrow for the Just Group and Brookfield filings.
Brookfield Wealth Solutions. Don't drop the Wealth Solutions part. But honestly, I am way more interested in SAP and Reltio. We need the actual multiple on that deal.
SAP is just FOMO buying into the AI narrative. Strategists are calling AI the ultimate catalyst forcing these pivots. It is a classic K-shaped market, mega deals or nothing.
Oh, come on. SAP buying Reltio is not FOMO, it is fundamental data management. You can't just slap the AI label on a data integration deal and call it a strategic pivot.
Watch their investor deck tomorrow. I bet you a bottle of Pernod Ricard, they print AI on the very first slide.
Make it Brown-Forman and you have a deal, especially since those two are actively talking about a blockbuster combination right now.
Deal. Almost as satisfying as Jack Nicklaus teaming up with TWG to buy back his namesake golf brands tomorrow.
The Golden Bear gets his claws back. We will be reading those Brookfield footnotes the second they drop. See you tomorrow, Nate.